was enjoying that funky music though. Seriously, how good. Welcome everybody. Glad you could all make it. 650 odd people registered for this. 100 of you absolutely 100% in the last 10 minutes. But thanks for all turning up. I really appreciate it. I know that this must look like an amazingly professional film studios behind me, but I literally just had to shoo 2 cats and 3 12-year-old girls on a sleepover out of my room so that I could do this webinar with you tonight. So, pain and suffering for everybody. Do you know how hard it is to make 3 12-year-old girls stay quiet for anyway. So here we are. We are in the cusp of a really interesting property market, which is in itself in the cusp of a really interesting time in the New Zealand market because of this bloody election. And everybody just stops and doesn't do stuff when there's an election on. In 2 weeks' time, we're all going to know who Winston decides that we're allowed to have as our new prime minister, and life's going to go on. But I today wanted to, I suppose, come to you and show you a little bit of an idea from where I see it in my mind, and give a little bit of, I don't want to get too political because, as I've said many times before, I'm purely a full-time property investor, but most property investors have a day job and they do a whole pile of other stuff. And so therefore, property isn't the number one thing on their mind, maybe, when they're voting. So I'm not going to tell anybody else how to vote. I'm going to try and stick to my own particular bias. I know that's so wrong. And just give you some thoughts and ideas from my brain, I suppose. So let's get into that. Starting with, I suppose, how I see the world a little bit. Now, I've been a full-time property investor for 20 odd years now. I bought my first property when I was, I think, 18 in Makareni Street, Parapara Umu, represent. Owned that for a while, sold it, did a whole pile more property deals and trades, and got fairly prolific in my 30s and 40s. And hey from Leon. And got fairly prolific and did huge numbers, like more than most other people would possibly do. I think I've capped out one year doing 200 renovations, as in buying, renovating, and then on selling 200 houses in 1 year. I've done about 1,400 contemporaneous settlements and trades. I've done Airbnbs. I've done boarding houses. I've done, blah, 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 blah. And I've decided that my skill is property and real estate and doing it for me and teaching it to other people, because I'm in an industry where, for better or worse, I could tell absolutely everybody, hey, hi from Mount Vic, represent. I could tell absolutely everybody on this webinar tonight exactly everything I know, and it wouldn't detract at all from what I'm doing, and it wouldn't make me any less money. And I love that. But I also love the idea of being independently wealthy at some point. And so what does that look like for most everyday New Zealanders? In my mind, independently wealthy means $3 million. Anything less than that, and you don't have enough asset base to survive and have resilience and stop working. Anything more than that is play money. It's for ego, for legacy, for jam. And I reckon $3 million is where life begins. That might be a touch scary for a lot of people, and I get that. But in my mind, if I've got a job, then that job's job is to create weekly revenue for me. And that is seed capital. And life begins when you decide what to do with that seed capital. So if you're taking that seed capital and investing it and getting passive returns from it, then life begins when you get to spend that money. So $3 million in my mind, if you get a really conservative 5% return, you're going to receive about $150,000 per year without losing your initial capital. So at the end of 10 years, you'll have had $150,000 a year come in, and you'll still have that $3 million. And that's why I think life begins at $3 million. Excuse me. So everything after that, legacy, ego, whatever you want to call it, it's great to have more. And I know that there's people out there go, 10 million, 10 million. And there's people out there that I just want my own home and one rental. I just want to bolster up my, my retirement savings. And so what I'm saying is $10 million in equity. You can have $6 million in real estate and a $3 million debt, but you essentially just want $10 million in equity. And the cash return on that should earn you around $150,000 a year. What can you do when you've got 150 grand a year and you don't need to go to work for it? You can do nothing if you wish. You can do absolutely nothing. You probably can't travel the world in a Lamborghini, don't get me wrong, but like you could stop working and then your day job stops being your day job and anything you do for revenue after that becomes a side hustle. So that's what I'm in favor of. That's what I'm like. So the question has to be asked, does money make you happy? Now, just about everybody I talk to says no. They say family makes me happy and healthy makes me happy. And I'm just gonna get in trouble here. I'm just kind of sick of trying to tell people that it's really, really sucky to have bad health or a shit family life, all that type of thing. But when the plane goes down, the captain tells you to put your own mask on first, and you can't help anybody else if you need help yourself. And so I kind of, you jokingly say that it's easier to cry in a Lamborghini than a Corolla, but it's not that far from the truth. I don't think money actually does make you happy, but I do think that being poor creates unhappy. And so let's avoid that whole thing and create some assets and create some value for ourselves and for our families. So that's kind of how I see the property market. I think that I don't think that everybody in this country can get to the $3 million mark. I don't think everybody can get passive income and own properties. But do you know what's a good start? Jumping on a bloody webinar with me, because I did that when I was 32 years old and I've progressed since then. 51 now. I've progressed a lot since then. I was pretty happy back then. I'm a lot happier now. What is happiness though? And does finance and money actually make you happy? Well, there is a lot of studies that some stuff that's actually come out this week saying that about $193,000 a year is the peak, is the pinnacle, and more money doesn't make you more happy after that. I found that one quite interesting. Dan Bilzerian actually came out with something very similar. Not a huge Bilzerian fan. He's a bit of a quasi Andrew Tate, if you like, but he came out with something very, very similar, saying that $250,000 in annual salary, you stop getting happier for every dollar after that. I found that super interesting. I do think though that if you earned $193,000 and gifted to your charity of choice every dollar you make after that, you're a bit of an idiot. But I do believe in giving in altruistic views, and that's why I support a lot of charities myself. But moving on from there. So where are we right now? Where are we right now in the property market? I think everybody on this line tonight will know that we have had a big and quite fake boom. Like, we didn't have a natural boom in the last couple of years. We had a COVID-inspired government printing money left, right, and center, a fake boom as such. So what happens now? What happens after that? Well, it's no different to how it would happen normally in any other way. So we have a property clock, and this property clock, I've been through 4 of these. I've been through 4 trips around this clock. And so right at the very top there, number 12 o'clock, you've got an absolute boom time. So when would the boom time have been? Because about 17, 18 months ago, the boom time stopped and we went into the slump and recession. So the boom time was probably 2.5, 3 years ago, realistically. That was the 12 o'clock mark. We're certainly not in that boom time now at 12 o'clock. We've had rising property values and falling yields. We've had high rising interest rates and oversupply. And then COVID actually mashed that interest rate down and it fell like a rock. And then we went into a slump and we had falling prices. We had lower sales volumes, falling construction. We're coming around past 3 o'clock now, right? And at that point, we had developers not buying any more land, developers not building any major bulk new properties for a little while. They're getting a little bit stagnant, a little bit, hesitant maybe because they're not getting the sales. And that's all sentiment, really. And then we have a recession, harder to obtain finance, definitely had that bit. Low falling or lower interest rates. Now, we haven't had low interest rates in this part of the cycle yet, but what we have had, and you've seen it today from the Reserve Bank announcement to not increase interest rates, is we've had a stabilizing of interest rates, which is coming along to being same thing. Higher unemployment. Well, we actually haven't had that. So what we've got is positive market sentiment at that point. So then we've come into recovery. Now, if we have had the boom at the top there, go the other way. If we have had the slump, and if we have had the recession, and we have, what's next? It's a recovery. And a lot of the media are starting to talk about this recovery now, and we're just starting to feel it and see it through all of the auction rooms, to see it through positivity in the market and sentiment. And what we do know is that prices have stopped falling. They haven't shot back up again, but that doesn't necessarily happen. The market can go flat and go very readable for a while. Interest rates have become stable, and we are starting to see an undersupply, which is on that clock. We are past 6 o'clock. We are definitely past 6 o'clock. So what's happening? What happens next? What's next on that property clock? You can read it as well as I can. Things start to go up. What goes up? Prices. And we're just gently starting to see that happen right now. What goes up next? Rents. Well, we've definitely seen rents start to go up. Wellington's had a bit of a tweak, but Wellington's been late in all of this. Auckland's really seen some movement up. Christchurch has seen massive supply, and so not necessarily a movement in rent just yet. But certainly Auckland, north and west of Auckland, rents have gone through the roof. We are still getting really healthy rents in Wellington, but they were so high to start with that they didn't really take a big bash. What we're also starting to see is higher volumes of sales. So things aren't sitting on the market quite so long. The next thing that we will see round about 7 or 8 o'clock on that clock is ease of funding. Now, the reason that funding will become easier is because as values in real estate start to rise and prices start to go up, people will realize that they've got equity in their properties, and banks will be more comfortable and safer with lending money to people because of that. So what do we do? What's the magic bullet? Where do we go when we're starting to come out of a recession? I think I've hit the few things on the head. Prices start to move, money becomes easier, rents go up, and sales volumes start to move along. So this is why we're seeing so few properties on the market right now. Because if you've got a problem and selling a property is going to fix this problem, then you just do it. You often don't have a choice of when you do it in the market. But if you don't have a problem and you look at the market and go, hey, you know what? I think next year is going to be better than this year, then people don't sell. And that's what we're seeing. Constipation in the market, lack of listings, average days to sell is down because people are buying what they can buy at the moment. People who are buying now are going, this is going to be worth more next year. People who don't have to sell are not selling because they're also going, this is going to be worth more next year. It just makes sense. So am I just talking out of my bum, or can I back this stuff up? And so I had a bit of a look around, and I looked at the REINZ website, and I looked for a few decent ideas. Really, this comes from interest.co.nz, and this is takes us right back to 2004 or 2008 or something. So this is the interest rates. Now this is the 1 year fixed rates for that period. Now, if you follow along, they tracked up, and then that fell off a cliff, and then it stuffed around a bit, and then you got absolutely down to sort of 2% interest rates fixed for 12 months. Now, about 2 years ago, I came out with a video and made a pretty bold claim. I said that interest rates had bottomed out, and that this was as low as it was going to get. And if anybody had floating rates or short-term interest rates that they could break, that would be a fantastic time to break those rates right now, even if there was some sort of break fee, and then refix at under 3%, but fixed for 5 years. Now, the people who did that are still on sub 3% interest rates for the next 3 years. How happy do you think those people are? Because I bought a house this week and I paid nearly 7% interest rate fixed for 12 months. So after that point, it's gone nowhere but up. So here's me making another bold assumption. I don't think interest rates are going to go much higher than this. At the moment, the Reserve Bank's OCR rate is at 5.5%, which means that we're borrowing money at about 7%. And the entire investing public that have a short 3-year memory think that that is high. But 7.25 is the 25-year average. So it's really not high. It's just what we have at the moment. Now, I think that that's capped out. I think that it's not going to go much higher than that. And if you look at the 1, 2, 3, 4, and 5-year rate, the banks are picking the same thing. They're picking that for 18, 2 years, and 3 years, the interest rate will be lower at that period. That's the bet that they've put on it. What else is going on? That's interest rates capping out, maxing out. Housing confidence. Now, housing confidence is always a really interesting one. I've just gone back like a couple of years to show you that housing confidence spiked, double spiked basically. Then it fell off a cliff over COVID, and then after the boom of the COVID boom, and it's just starting to come back nicely now. Why is that? When housing confidence falls off a cliff like that, it falls off predominantly because people are worried about how their job is going. They're worried about whether they can fund a house because they're worried that they might lose their employment. At the moment, we've got massive employment, not a lot of unemployment. We're actually screaming out for immigrants to come into the country to help us out with some of the jobs that we don't want to do or can't get to. So if somebody really wants a job in the current market, they could probably get one. So housing confidence is starting to really, really come up, which means that when people are confident about their employment, they go and buy houses. That's just the way that it works. Cool. So that's interest rates, housing confidence. People that are safe and secure in their employment, they buy houses. But do we have enough people in New Zealand? I'm sure that everybody has talked to or heard of somebody talking about leaving the country, going to Australia, doing the big OE, doing whatever. And there always is. There always is those people doing that. But guess what? Check out this graph. This was pre-COVID. Then the world closed down and we went through the guts. As soon as New Zealand opened up again, we're back to net long-term migration of 100,000 people a year. So we have 100,000 people coming into New Zealand every single solitary year who aren't then leaving again. They're not coming on a holiday. They're not transitioning through here. They are coming. Now, the people that we seem to get are Indians, Pakistanis, Chinese, Asian immigrants, South Africans, and some Europeans. Now, these people don't arrive with a house. They rent for a couple of years. Solid numbers showing that that's exactly what happens. After a couple of years, their family comes over as well. They have a bigger tribe and they all buy houses. And they are fantastic for the economy because they create a new need for fresh new houses. And I'm sorry, but we're undersupplied. We don't have enough to start with. So people coming in is incredibly healthy for housing numbers, housing values, and it pushes it up through the roof. So let's have a think about how many houses we actually have on the market at the moment. Do we have enough houses for these people? Well, this is New Zealand's current listings, housing stock. Now, way back 2008, we had heaps, and obviously it's seasonally adjusted. It bounces up and down because in the middle of winter, nobody wants to do open homes. In the middle of summer, when there's daylight savings, heaps of people want to wander out, have a look at houses, get things done, and people list their houses more in summer. So that's why it jumps up and down, seasonally adjusted. But let's look at it. Listing numbers have dropped for decades, and they were at an all-time low. And then there was some sales after the boom and during COVID, and then suddenly we've dropped again. Now, this drop could look a lot like it's a seasonally adjusted because it looks like a lot of the drops in the rest of the map, right? Or it could be FOMO, fear of missing out. People just not wanting to list now and sell their property now because they think it's going to be worth more later. And that's what my thought is. People just aren't listing their properties. And I think that's a show of confidence in the marketplace. Now, confidence in the marketplace itself predominantly comes a lot of it from sentiment. And sentiment is, how does the general average Joe Blogs feel about property, real estate, making money through real estate? A lot of that comes from the media. And this is some of the stuff we're seeing come out from the media at the moment. CoreLogic today said that national property values have flattened as Auckland shows growth again. So national property values have stopped falling and are poised to take off back up the other way. And Auckland's already started that. Now, I've said for months and months that Auckland at the moment is on sale. It is as cheap as it's ever going to be in my lifetime. Now, the reason I believe that is because for years and years and years, I've been molded by the media, by the front page of the Herald to see property values in Auckland go through the roof. Now, we haven't seen that for a couple of years, which means that we have subtle property values in Auckland at the moment, and they are super poised. So I'm watching barefoot auctions really, because barefoots do multiple auctions in one day, and they are just such an incredible, I suppose, barometer of the marketplace. And when they start getting busy, Auckland gets busy, the rest of the country follows on suit because people have money, they want to put them into real estate, off they go again. And it's just nuts. People want to buy. Sentiment is super hot, despite every fiscal policy that previous governments have been able to throw at us. They can't cool the property market. I'm sorry, but I am not going to start a toy brand in China. I'm not going to start the next vodka to come out of New Zealand. I'm not going to compete with Trade Me. And I don't know about you, but I've never had that aha moment, that brilliant idea that's going to make me $100 million. I'm a slow and steady guy. And I know that if I have 3 or 4 houses for 20 years, I don't need to worry about KiwiSaver. I know if I have 6 houses for 20 years, I don't need to worry about where the food's going to come from in my retirement ever. I know if I have 15 plus houses, I can do some international travel and have a new car every year or two. Like I understand that. I know how that works, and that's my plan, because it's not get rich quick, it's get rich for sure. It's make that thing happen. So governments and successive governments have thrown loan to value ratio restrictions at us. Resilient property investors find ways to handle that. They've thrown debt to income ratios at us. We've gone second tier lenders and different funders. They've ring fenced losses, and we've got creative accountants to help us out with that. They did triple CFA rules, and they threw that at us, and we went, oh, God, and they actually reversed them because there was such an uprising. They have the sensible lending limits and criteria. We have Reserve Bank restrictions from New Zealand and Australia, and now we have tax non-deductibility, which I truly believe we won't have next year. I think we're going to fix that one. I really do. I think that housing is the preferred and still preferred way that Kiwis grow wealth for themselves, their families, and for their futures. And so I'm just going to stick with that one. So what are the election promises? What are the talking heads in the beehive over here? What are they saying? What are they promising us? How do we decide which team to let lie to us for the next 4 years? Come on. I'm not wrong, you know it, right? I mean, it's pretty tongue-in-cheek, but who's promising what? Let's have a look at it. This really good graphic, I suppose, came out of Auckland Property Investors Association, and I've stolen it and posted it and shared it, and I'm pretty sure that hopefully that was the intention. So what we've got down this one side is reinstating interest deductibility, winding back the bright line, reversing ring fencing, introduce a wealth tax, introduce a vacant house tax, introduce a land tax, blah 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 blah. So it's pretty easy. And look, I'm going to try and be. Yeah, I know I'm wearing blue, but I'm going to try and be as realistic about this as I possibly can. Let's look at the list from the Labour Party. They introduced non-deductibility for property investors, which just shat the market. That really, really, really hurt us. They brought in the bright line test. which I didn't mind at 2 years, but at 10 years, bloody hell, calm down. They reverse ring. They bring in ring fencing. They won't introduce a wealth tax or a vacant house tax or introduce land banking tax. But let's be fair, like the Labor government has loved every tax that they've ever seen from year dot. They won't introduce rent control or warrant of fitness or a landlord registry, but they're not giving us anything either. So for my money, Labor are offering us nothing, absolutely nothing. So let's go to the very, very far side. What's the Maori Party doing? They're not going to take deductibility off the table. They're not going to change the bright line. They're not going to reverse ring fencing. What they are going to do is introduce another tax, a wealth tax, and they're going to introduce a vacant house tax, and they're going to introduce a land banking tax. And so Labor's not offering us any cookies. The Maori Party is going to make it worse. Now, let me be realistic here. Like, I am very, very realistic that real estate and property is not everyone else's number one main thing when it comes to who you might vote for. It's mine. It's a lot of people I know. I mean, I'm a full-time property investor. I'm not doing this as a hobby. But it's not a one-issue election. But I'm just telling you how it looks on the ground, on the landscape for this particular policy, which is the property stuff. So let's then look at the Green Party. They're not going to give you any cookies either. They are going to introduce a wealth tax, rent control, rental warrant of fitness, and introduce a landlord register. So when you're looking at hardliners, it starts making Labor look a little bit moderate, except that Labor's already brought in all of this stuff because they're in power. The Green Party and the Maori Party seem to want to make the property market even worse, even harder for us. So let's get to the, excuse me, dying all week. Let's get to the meat in the middle of the pudding. The National Party. National Party have said that they will give back deductibility to property investors, but they're not going to do it straight away. It's going to take 2 years. So they took away 25% and then 50%. And if National get elected, they're going to stay at 50% and then go to 25 and then go to 0. So they're going to slowly take it back again. The ACT Party has said that they will do it straight away. So, two things. Do we believe them? Be a lot of egg on face. I mean, they've said it very, very publicly. It's on their website. It's in their policy statement and their documents. I kind of do actually believe them. I do worry about what else they'll chuck in the meantime. But okay, I believe that. So I believe that National will slowly take it off and ACT will take it off really quickly. But who's most likely to be in Parliament? It's most likely at the moment, based on the polls, to be National 1 and ACT 2 in a coalition, which means that ACT's going to want some of their things done and National's going to want some of their things done. So between the Blue and the Pink Party, we are kind of getting some fresh cookies. We are getting some treats. We're getting some of the stuff we want. Both parties have said that they will wind back the bright line test. ACT have said to 0, National have said to 2 years. I don't mind 2 years. 2 years is fine. The thing you got to remember with the bright line test is it hasn't replaced intention. There is still an intention rule with IRD and a bright line test. So if we wind the bright line test back to 2 years, I'm okay with that. Both parties have said they'll reinstate the 90-day no-fault termination. I think that was a big mistake from way, way back. I think that it's stopped landlords from being able to give a shot to marginalized tenants, which is something kind of close to my heart as well. So, like I said, I'm not going to tell anybody here who to vote for, but if you are purely looking at what's good for you, as in you, the property investor, then it's somewhere going to have to be somewhere in a National ACT marketplace. Now, that's based on the information that we've been given by the policy statements that the politicians themselves have said to us and in the media. I've actually sat down in Parliament and spoken to the policy advisor for ACT. I've contacted the policy advisor for the Green Party and didn't get a reply. I think it's because I'm an evil capitalist or something. I'm just reading between the lines. Haven't spoken to the Maori Party. I haven't got a reply back from the Labour Party either. Wonder why. The property spokesperson for the National Party, which is Chris Bishop, who actually just lives in Petone, just down the road from me here, because I'm in Wellington today, has agreed to come on and speak to us. And I'm keen enough to have a chat to him as well at some point. Running out of time, busy. But that seems to be the initial lay of the land. So where's the silver linings? Where's all the money at? Well, the silver linings are kind of obvious. This whole country is waiting for this election to be over. They're constipated. They're sitting there waiting for it to tick down. Everybody wants it to be just done and dusted. What happens after that? We've got daylight savings. We've got summer coming up. We've got a new political party in place, which is looking like they're going to be some ticks in the green and the pink box, which gives us our deductibility back either straight away or eventually, and the bright line test gets reduced somewhat. And hopefully we've just got a government that's more creative with getting us out of this COVID slump. Like every other country in the world is promoting the idea of bringing in immigrants and getting their economies going. So where's our silver lining? Well, here's one. Every $1.7 million house in the market is going to go to $2 million overnight, because the National Party is saying they're going to reverse the foreign buyer ban. Now, I like the idea of reversing the foreign buyer ban. I think that the $2 million limit they're talking about is a little bit too low. I think for international buyers, $5 or $6 million is entry level. If you're an international family in one of the sort of lower socioeconomic countries around the world looking at moving to New Zealand, you might have 6 people in your family putting money in, and they can raise $2 million to buy a house if it's an immigration track into New Zealand. Whereas I think what we really want to encourage is some of the big money, some of the top end of town. We want to encourage New Zealand developers to build $20 million apartments so that they are sitting in New Zealand's economy, and then sell those to the international people. 15% tax, and just put a slightly higher cap on that. But the silver linings for New Zealand property investors is if you own a house worth 1.5, the National gets into in power and reverses the foreign buyer ban, that 1.5 house becomes 1.7. 1.7 becomes 2. 2 becomes $2.3 million very, very quickly. And I think there's an advantage to be had there, and it's something that we can sort of jump into. The next thing too is that first home buyers are coming back, like in power. Funding is becoming easier for them. They're starting to realize that the market's moving back up again, and they're getting confidence the same way us property investors are. And so when they come back into the market and take out the entire bottom of the market and all of the new builds, the market's going to move, and it's actually going to move really quickly. The next thing is smart trading. Now, I haven't talked about trading for a couple of years. The reason for that is you don't catch falling knives. If the market's going down, don't catch it when it's falling, because you don't want to buy a $600,000 house, spend $100,000 renovating it, and then sell it for $550,000. You want to buy a $600,000 house, and even if you stuff up the renovation and keep it for 6 months, it's worth $600,000 when you're finished. So it's so much safer to trade when the market is going back up again, which is why I'm going to start talking about it more and more, because I've, in my investing, found it a very easy way to put $200,000 or $300,000 more in my pocket every year from just buying smart properties. And we're getting into this before it's the conversation around the barbecue, and before your Uber driver from the airport starts talking about he's bought 2 reno jobs to get done, very early in the piece. Because I want to put my following, you guys that are watching this today, ahead of the curve on that one as well. So smart trading is there. There are a few more risks for the uneducated, and that's why I'm educating people. That's why I'm doing the thing. And so once again, I'm coming back to Auckland, and because you guys have sat through 34 minutes of my rants and explanations and conversations, I really want to make you guys a fantastic offer to come and see me live, because I can only sort of say so much in 30 minutes, but I really, really love the idea of doing these boot camps, and they've been so, so popular. I've had hundreds of people come to the last few of them. They've always sold out, and I want to make a fantastic deal for you guys tonight to get you to come along as well. So it's very new information. It's new and improved. There are very, very limited tickets because it's really hard to get a big room. And I mean, if I can do a webinar and get 700 people on it, and we book a big room in Auckland to do this event, which is 5th of November in Eden Park in Auckland, We've already got 100 tickets sold. There's 400 tickets left, and I'm going to release a couple of things tonight that are going to make it, in my mind, pretty exciting, pretty cool. Firstly, we're going to be in this room, which is the great room at Eden Park. The reason we're doing that is because it's really easy to get to it. It's in the middle of Auckland. There's masses of parking, and on a Sunday, there's nothing else on in this venue. And it's Eden Park. It's really cool. You can have a good look around. It's bloody stunning. And so, we're going to get stuck into that. What we're going to really talk about in a deep dive is the smart trading. It's getting stuck into buying, renovating, and selling houses again to create cash flow so that you can buy more hold properties or new builds or things that you want to keep for that 20 years to bolster that retirement. And I'm talking about this from a place of having done it for decades and having got myself to a point where I'm really comfortable. And now what gets me up in the morning, what gets me real excited is taking my clients and showing them that track and showing you how they've gone and done exactly the same things and that the same principles are still winning. So winning the timing, like it's not time in the market, it's timing it, it's getting it absolutely spot on, knowing the exact right numbers of buying a property, how to renovate it, how much to spend, and knowing which properties to buy, because I really think this is one of the most important things that a lot of people get wrong. They buy the absolute dog of a property that takes a year and a couple of $100,000, whereas they could buy the cosmetically distressed, the dated one with the shitty carpet, the one that smells bad, and it's just carpet and paint and nothing structural, and it's back on the market for a profit very, very quickly. And instead of doing 2 of them a year, you can do 4 of them a year with a lot less risk because they're smaller transactions and because the thing that you're selling is more highly regarded by a larger amount of the market. So if you do a 4-bedroom villa in Mount Eden and you have to sell it for $2 million to make a profit, there's 35 people that are going to buy that off you. If you buy a 2-bedroom unit in South Auckland and sell it, make a $50,000 profit, there might be 200 investors or first home buyers that are your target market for that property. Way less risk, way wider situation. The other thing I'm going to do, and I'm going to announce this today for the very, very first time, so I'm going to buy you lunch. Because it's just a pain in the ass to close down the entire event, send 500 attendees away for lunch, and then get them all back in the room again. So for the same ticket price that I normally do for my events, which is 70, 80, 100 bucks a ticket, you're going to get a cooked hot lunch on the table in the room at the time, hopefully with a guest speaker. Can't really announce that yet, but working on it, right? And so it becomes just this massive networking exercise. Now, if you've already one of the 100 people that have purchased your ticket, you get this too. If you're going to buy your ticket tonight, you get this. Everybody gets a free lunch. Lunch is on Steve. I think that's kind of cool. I honestly do. It's going to be a lot of fun. I'm looking forward to it. So here's the deal, event deal. And it's really only for the next 30 people that buy a ticket. We're going to do 15% off all tickets. So all you got to do is hit the link there, which is visit stevegoodey.com/Auckland. And the promo code is webinar15. And it's available for the next 30 minutes or until 30 people have bought their tickets to the event. And we're going to spend the full day with 4 or 5 guest speakers walking you through the strategies that do work in the current market and the strategies that don't work in this current market to save everybody from having the 10 years of stress and nightmares and screw ups that I had to work through. And I'm going to bring in some relevant market experts. We're going to have some stalls and displays, and we're really just going to whiteboard it and get you to sit down with a pad and a pen and write out your plan. How are you going to do it? And get a roadmap going for everybody so they can move forward, because I'm 51 and I will probably see 2 more booms and then I'm done. I'm retired. I'm going to go and buy a private island and and just do all the rich dude shit, and I want more of my followers to do exactly the same thing. And just get stuck in and get it done. And I want to promote that feeling of you can do it, because you 100% absolutely can. Steve, after hearing you 10 years ago, I copied you somewhere in talks of hiring a 500K car driver from LA to Vegas early this year. Thanks for all the property. Love that. Shit, that's good. Oh, shit, that's awesome. So, so there we are. Like, grab the website, grab your tickets. We will sell out. It is going to be a really, really large event. Um, as I said, we're going to have a pile of guest speakers, a whole pile of new information. We are going to put on a cooked lunch for absolutely everybody that comes along. Just make your life easier, like let's just get that stuck in. Now, if you have any questions, bang a question in now. I've got about another 10 minutes. What I am going to say, though, is for everybody that's registered tonight, I'm going to bang up another link for another webinar tomorrow night. Not tomorrow night. Same time, 7:30 Wednesday night next week. And what I'm going to do is do a bit of a deep dive and a bit of a case study on boarding houses for high cash flow. I know a lot of people are really interested in it, so jump in there. A lot of people asking me whether I'm going to do a Wellington event. It's really hard. Like, there's not enough big venue spaces in Wellington, so it makes it really difficult for us. Whereas I did a Christchurch event a month ago, I think, and we had people from Whangarei and Wanganui and Auckland and Gisborne and Invercargill. People came from all over the country. And so what I would say is our event's on a Sunday. If you want to come from out of town, just book it. Jump on a plane. I will change your life. I will. I'll make you do this stuff. I'm that annoying. Like, book a ticket, turn up, come, let's go. So bang in a question in the text now if you'd like to. I hope that tonight's content and information is like got you G'd up and stuff, because like it's all go. Like I'm seeing so much activity out there in the marketplace. It's just fantastic. But grab a ticket to that event and come and see us live, because we really do put it on. There's freebies and there's giveaways and there's tidbits. And back in the day, I went to everybody that turned up in Auckland. I came to everybody and heard everybody's opinion. And you gel with the people that you associate with, but you always get that one piece of like legit information that helps you push forward. So cool. Thanks, Clark. Good to hear from you, mate. Boom. That's my presentation for tonight. I will bang up the link for the next webinar on the Facebook page tonight, tomorrow. And it'll be on boarding houses next week. Same thing. There'll be another 600 people, and we'll do it this way. And I'll run you through how it works. Short-term versus medium-term accommodation. Any thoughts? Yeah. Depends on the location, and it depends on how much management you want to take on. Short-terms like Airbnb and stuff, you can get really premium money, but you've really got to keep working it yourself. And if you don't, and you put a manager in, you've really got to pay them quite a bit of money to manage it. So I'm a bit on the fence on that one. Mostly it works, but sometimes it doesn't. Certainly, like Queenstown, Wanaka, Waiheke Island and stuff, short-term, great. But ultimately, my aim is to be a passive investor and have money come into my account while I'm asleep. So I don't really want to put that much work in if I can possibly help it. How do you deal with tax and current deductibility, not making any money book-wise, but still might end up paying income tax? You vote for the blue or the pink team, don't you? Let's reverse that bullshit. But also, there's a heap of asset classes that do have deductibility. Commercial buildings, big or small. Boarding houses of 10 rooms plus. New builds. If by any fit of retardation we end up with a Labour government for the next few years, well, firstly, I'm going to move to Australia. Or not Australia. I'll probably go further because spiders. But yeah, no, there are ways around it, and I will discuss that heavily at my event as well. Steve, can you help me getting rid of debt, please? Well, I just give you 15% discount on my event. Like that's like free money. Promo code is webinar 15 when you go to the booking thing as well. Melissa says, me too. Passive income by 50 is goal. Yay, passive income. Love that shit. Yep. That's excellent. Has lending eased on small development like but building 2 townhouses at the back sort of projects? Is it worth it yet? It's quickly becoming worth it again. Yeah, it depends heavily on your own financial situation. But yeah, absolutely. John says he's bought 2 tickets for him and his wife. Yeah, there's a really decent special on the page for double tickets as well. Cash flow is tough at the moment. What net yields are you seeing if someone could borrow 600K. Well, I like to buy other people's problems and fix them. And that means that I really don't settle or keep any properties unless they're getting around 12% net personally. Um, Most people that boggles them, it blows their mind, but I'm finding deals that are at that level. And I can explain at the event, obviously, how I get around that and how I find those. Yeah. Um, I'm in Wellington, flew up to Auckland for the last Auckland event, left Friday evening, back Sunday night. Well worth making the trip. Just finished off our first high cash flow rental. Whoa! Thanks, Steve and team. Book the tickets. That's awesome. Thanks, James. Really appreciate it. Looking really forward to seeing you finish up that project and make some pay dirt out of that bad boy. Hey, Steve, is the content of this new similar much information that crosses over from the last ones, or is it layered a bit differently? It's always layered a bit differently. We've actually got a couple of different speakers, and we're putting in the strategies and the information that you need to know for the next round of property boom. So we are still talking about high net yielding rentals. We are still talking about some boarding houses, but we're definitely putting in a whole pile of new information on property trading and how to set that business up as well. Yahoo! Joy's just confirmed. Yay! Yeah, I should do a coffee catch up in Wellington. It's been so long. I might do that next week as well. What do you reckon? For anybody in Wellington, let's just do like a coffee morning. I might just go and do a big table in prefab 9:30 or something. I'm there most days anyway. Yum, coffee. Awesome. Hey, that's been fantastic, guys. I really appreciate it. I know I've taken 47 minutes of your time, and I just want to thank everybody for turning up. And obviously grab your tickets. The link will be live for about another 15 minutes with that discount, webinar 15. Grab those tickets and let's see you in Auckland. And let's just bought my ticket. See you on the 5th. Woohoo! Wicked. Anybody interested in high cash flowing boarding houses, I'll do a case study on that this time next Wednesday, 7:30 next Wednesday. And then might do some stuff on finance after that. Yeah, we'll see how we go. But I hope you really enjoyed the information tonight. Thank you so much for joining me, and have a great evening. And we'll see you all